Hello, good afternoon. You've tuned into your stocks on CNBC-TV18 and I'm Vinny Motiwala in the Mumbai News Studios. A quick look at what the market is doing as of now, because 24,000, we are comfortably above that mark is what the Nifty is trading at. 24,144, up almost 1% in trade. That's what the Nifty is trading at. Pull up the mid and small cap as well, because that's also made a recovery from the day's lowest point. So Nifty mid cap is back in the green, up 0.2% in trade. Nifty small cap too is trading with some bit of a gain and momentum there as well. So pick up that we've seen from the day's lowest point for the broader markets. Nifty Pharma, that continues to see a good performance coming in today as well. So Nifty Pharma seeing strong gains today in trade, some buying coming there, 2.5% uptick for the Nifty Pharma. But that's how we're looking at the market as of now. Recovered from the day's lowest point, and benchmark indices continue to see a good performance in trade today. But this is a show where we'll be solving all your stock related queries, and we do have our experts joining with us this afternoon. Shahina Mukadam, independent market expert, as well as Vaishali Parekh, head of technical research at Prabhudas Lilladher, to solve all your stock queries. Good afternoon, ladies, and thank you so much for joining with us as always on CNBC TV18. I'm going to start by just looking at the market as of now. We've seen a bit of an up move coming in. Vaishali, what's your take on the market? What are we expiring? New series that has started today as well. December holiday cheer is what we're expecting on the street.
Very good afternoon, ladies, and thanks for having me on the show. So yes, I think market, we are hoping that it gets into the festivity itself. So technically speaking, Nifty has for now taken support at 23,200, and on near-term basis, I would say 23,800 should be the support. So as long as we are above these support levels, we would be seeing resistance at 24,350. So I would say it's right now a positive bias with a range-bound movement. Unless and until we move past 24,350 precisely and sustaining above that, I would say it's sideways. Otherwise, it would get into a strong trend.
Okay, keep an eye on those important levels over there. Let's hope for some holiday cheer on the D Street then. But let's get started with all those stock-related queries. This first query we have is coming in from Sarath Kumar, who's writing to us from Tamil Nadu. He's holding 68 shares of Adani Energy Solutions at a price of 914 rupees. Wants to know whether to hold or sell this one. Shahina, let's start with Adani Energy Solutions with you. We have seen the stocks run up in the last couple of days, but before that, we've seen that fall coming in. So what's the word on Adani Energy Solutions?
Well, see, the impact of those allegations was not only on the stock price. Of course, now we are seeing some rebound, but it was also on the ability of the group to raise funds going forward, at least till this issue is clarified and till there is some clarity as to exactly how this is going to pan out. So I would believe that this is a negative. And also in terms of valuations, the stock is slightly expensive. Having said that, I think the performance is improving considerably. As we saw in the last quarter, they have doubled more than double their turnover. Profits is up sharply. So over the longer term, if these issues are sorted out, then you could see a continuing of the bounce that we've seen. But in my view, if an investor would not like to have risk in his portfolio, then he should exit.
Okay, should exit if you don't want to, hold on and you're worried about the risk, then you can look to exit as of now. That's a word from Shahina. But on the technicals, Vaishali, how is Adani Energy Solutions looking? Last 6 months, we've seen a bit of a fall coming in there, 23% decline when I'm looking at it. Valuations, China was highlighting that it's expensive. But on the technicals, is it meriting anything good? And should the viewer continue to hold the stock?
I would say today is the first day that it's also got into the F&O sector. But I would say, yes, I agree. The trend has turned corrective. But right now, what we are seeing, some strength and some buyback reversals coming in. So at least now hold till 1,000 levels. That is a level where one could see a tough resistance. So right now it is showing signs of reversal, but 1,000 would be a level to actually exit.
Okay, 1,000 would be a level to exit, maybe, so keep an eye out on that one as of now. That's the queried out that we had on Adani Energy Solutions. But let's move on, and we have the next query, which is from Jyoti Suri, who's writing to us from Mumbai, holding 50 shares of Zomato at a price of 100 rupees per share. So clearly she's making a good amount of profit on this one. Wants to know whether she should remain invested, sell, or what should she be doing with this. Shahina, Zomato, what's the word on this one? We have Swiggy also now that's come into the mix in the recent times for an investor to look at it. But what are you looking at in terms of Zomato?
Well, yeah, and that's too much of competition actually. Not on the ground so much, but in the equity markets where you just had one player and now you're having multiple players. That is one. Two is actually they are raising funds now, so maybe in the near term there'll be more of consolidation on the stock price rather than any movement upward. So if you're looking at the shorter term, I doubt if you'll make too much money. And in terms of business, there's a lot of competition. You already mentioned that these guys are raising funds, the competitors. You also have Amazon, which is talking of entering the field. So these are large players. So you're going to see competition impacting the margins going forward. We saw this in the second quarter, but second quarter the margins were impacted because of the investments that they are making in terms of the dark stores for Blinkit. So I think things will move. It's very strong platform stock in the space, got a strong brand recall, first mover advantage. Having said all this, I think if you're a medium term investor, you can take some money off the table, hold a small quantity if you want for the longer term, but I don't see too much of price movement upside in the shorter term, medium term.
Short term, maybe not too much of an up move in terms of the price for Zomato. Can book out some bit of a profit. That's the word coming in from Shahina. Vaishali, what's your take on Zomato?
Well, just today has been the stock has been taking a breather, but for now I don't see any weakness in the stock. So I would say keep a trailing stop loss. The nearest trailing stop loss what one can see is at 270 levels. And chartically, I think if the trend still continues, this can go towards 300 to 320. So and 300 nearly was the previous high also. And since the stock is already in the trend, it is very likely that it can retest these levels. So for shortest, I mean, depending on the time period that one wants to look at, 270 is the nearest time period, otherwise 250 as a positional trade. And since this person has bought at much lower levels, I think he can afford to keep a stop loss of 250. And that's the view.
Okay, that's the view coming in on Zomato from both our experts. The next query we have is on Nalco. We have Indira who's writing to us from Vizag and Vizag, I beg your pardon. She's holding 470 shares of Nalco at a price of 176 rupees per share. Wants to know whether to hold or exit this. What's the view on this one, Shahina? Obviously, the viewer is making some bit of a profit here right now. But, could they continue to hold or maybe just book out the profits?
I would definitely say hold. In fact, I would also say add. If you want to, if you're looking at a 6-month type of or 6 to 1 year type of investment profile, see, basically, you have a strong balance sheet. You have valuations which are pretty attractive. It's just about 2 times price to book and EV by EBITDA 7 times. So these things are in its favor. But the main thing that is driving the stock as of now, in my view, will be the alumina prices, which actually have moved up, are likely to remain stable. In fact, are moving up. And this is more related to the Chinese, economy, how they're trying to boost it, as well as some sort of changes in their duty structure. So to that extent, Nalco will benefit because it does produce alumina as well as aluminium. So being an integrated producer, it will definitely do better going forward in the next couple of months. So it is a hold or in fact add.
Okay, hold or in fact add. That's a word on Nalco from China. But on the charts, Vaishali, what is Nalco indicating? Can a viewer look to add? Because what I'm looking at it right now, YTD, the stock is up almost more than 70%. What would the chart be indicating for this?
The chart continues to show an upward trend. And if you go to see, of course, aluminium has outperformed the other metals in the whole of metal pack. The trend is very good. And I would say, well, add now, but there is a chance because since this stock has given a one-way rally, actually, if I look at the daily chart as well as the weekly chart, I mean, the rally has begun right from 170 and gradually now this is where we are at 240. We saw a good resistance at 270 to 75 levels. So it can retrace, in all likelihood, it can go towards 225. That would be an ideal level, according to me, to add more to the stock.
Okay, so still expecting up move here, Nalco, so viewers should continue to hold this one. Let's move on. Karthik is writing to us from Hyderabad, who's holding 920 shares of NHPC at a price of 114 rupees per share, currently making some bit of a loss here. NHPC is at 81 rupees per share. Wants to know what is the outlook of the stock in the near and long term. Shahina, let's take it to you first.
I would say this is a difficult stock to actually give a exit or switch call on, but still I would say that it is better to switch out, book your loss. Considering that if you saw the last quarter, the company had to pay fines or some contractual obligations, which actually were pretty substantial and resulted in a PAT decline. Now, there are some projects that are coming on stream in December and next year. So they've got about 5 projects coming on over the next 2 to 3 years. So to that extent, if you're looking at the longer term, say 2 years, 3 years type of holding, yeah, you may see a rebound in the stock. You may see your cost price coming back. But I believe it would be better to switch currently, because I see the stock moving in the same range for the next couple of months.
Okay, better to switch. But Vaishali, what's the technical chart indicating for NHPC?
I would say, well, it has shown a very good corrective move. And when I'm looking at a longer term chart also, I think it's pretty much close to the support levels. So purely on technical terms, I would say 76 acts as a double bottom. And from there, the stock is showing an up move. So I would say hold the stock and exit at near 92 levels. So that would be the view if it is for short term, but if you have patience, I think it should be held on. And in fact, it should be added with the stop loss of 75.
Okay, that's the view on NHPC. But on that note, we're going to slip into a very short break. Don't go anywhere, because after the break, we'll be solving more of your stock-related queries. Welcome back, and you're tuned into Your Stocks on CNBC TV18. We still have our experts with us, Shahina Mukadam, independent market expert, as well as Vaishali Parekh of Prabhudas Lilladher, who's here to solve all your stock-related queries. Let's move on to the next query, and this one is from Korean John, who's writing to us from Mumbai. He's holding 1,000 shares of Esaf Small Finance, purchased at a price of 51 rupees per share, making a loss here. As of now, the stock is trading at 40 rupees per share. Wants to know whether they should continue to hold this or maybe just book out their losses now. Vaishali, what's your word on this one?
Well, I would say that now that this person has held on for so long, continue holding with a stop loss of 37, because the indicators are showing that it's just making an attempt to come back from its oversold zones. So I guess, well, the first hurdle would be at around 43, 44 levels. So those are the levels where one can have a look to exit. But because if this level is crossed, then there could be a further high targets of 50. So for now, it's absolutely in a corrective mode, but 37 should be taken as a stop loss.
Okay. And Shahina, fundamentally, are there any concerns coming in, or can the viewer look to hold this one?
And there are a lot of concerns. So I would say keep a strict stop loss. In fact, they came out, they reported a loss in the last quarter. And that was largely on basis of huge provisions that they had to make. Now, see, basically, they would have known this much ahead of time. This is not bad loans or stressed assets that have just come overnight. So they should have been providing, in a over a period of time. Now, having said that, I think going forward also, valuations are not cheap. It's about one time adjusted price to book. Two is that, for MFIs and other, there may be certain provisions that the RBI will bring certain changes in provision norms that RBI may bring about in the near term or medium term. That also will have an impact on the profitability of a lot of MFIs. And there is a lot of stress in MFIs, in the books of banks. So to that extent, I would say take any bounce, keep a stop loss, take any bounce to switch. There are other banks that are available at similar valuations, which look much better.
Okay, sure. Obviously, and like you were highlighting, also these MFI concerns have been highlighted for a while. My colleague Abhishek had also highlighted this similarly in May also this year. So yes, surely when a bounce comes in, time to move out. That's the word coming in there as well. Let's move on to the next query. We have Chinmay, who's writing to us from Bangalore, who's holding 100 shares of Kaynes Technology at a price of 5,300 rupees per share. Wants to know whether to continue to hold this or look to sell this one. Stock trading at 5,940. Vaishali, what's your take on this one? On the technicals, how is Kaynes Technology looking?
So, well, it is going to be, it's continuing to be in an uptrend. There is no sign of any exhaustion. But I would say stock has really run one way. So I think continue holding with the trailing stop loss. The stop loss, what you can witness is 5,700 levels. Because if there is still further steam to it, this can go towards 63, 6,500. But 5,700 should act as a strict stop loss.
Okay. That's on Kaynes Technology, but on the fundamentals, Shahina, Kaynes Technology, how is that looking? Is it a good one to play out in terms of the EMS side, or are there better players that you would be looking at?
Well, if you're looking at the very long term, maybe 3-year period, then yes, it looks like one of the best EMS players in the space, given the fact that they're talking of investing and getting something like a 4,000 crore revenue coming out of the semiconductor business, which is, of course, a hot sector to be in as of now. Of course, it will take them that time to actually start. They're starting to invest. They just got the approvals to set up the plant in Gujarat. So this is going to take that period of time, take a 2 to 3-year period. Having said that, I think valuations are extremely expensive. Though they came out with very strong numbers in the quarter, expected to do very well in terms of growth, even in the medium term. But even despite that strong growth, I think the valuations are extremely expensive if you're looking at a 1 to 2-year period. So I would say if you're a long-term investor, lazy investor, not wanting to look, buy, sell, then yeah, you continue holding. Otherwise, you keep a stop loss, book, and then relook at it after some couple of quarters.
Okay, that's the word coming in on Kaynes Technology. Let's move on. This next query is on Jupiter Wagons. Now, in this one, when you're looking at it, till July, we've seen a very sharp run-up coming in, and now we're seeing a fall in the last 6 months specifically. Raghvendra Rao is writing to us from Hyderabad, holding 200 shares of Jupiter Wagons at a price of 706 rupees per share. Currently, the stock is trading at around 486 rupees per share. Wants to know whether to hold or book losses. Vaishali, what's the word on this one?
In fact, the stock is, we are watching this quite closely, and I think overall full railway stocks have really shown a good, decent corrective move. Now, talking about Jupiter Wagon, we have seen one-way downslide, and now the stock seems to be stabilizing. Further conviction comes only, it's a long-term trend line breakout at around above 500 levels. So the clarity of a further strength will be once the stock sustains above 500 levels. So till then, wait and watch. And I guess above 500, he can average out also and get into the momentum for higher targets.
Okay, wait and watch till 500 levels, and maybe then can look to average at least, but wait till 500. That's a word on technicals from Vaishali. But on the fundamentals, Jupiter Wagons, Shahina, what are you looking at here?
Well, it's likely to be a decent performer. It's got a good order book position. It's in an interesting segment that is growing. They grew about 15% in terms of revenue in the last quarter. Quarter revenues were about 118 crores. So that was decent. Having said that, in terms of valuation, Titagar is better. I would believe it's more attractive in terms of other factors like PE, price to book, compared to Jupiter. So if you would like to book some profits, then you could book and then shift to Titagar.
Okay, thank you so much, Shahina, as well as Vaishali, for joining in with us today, because that was the last query. Thank you so much for removing your time. But quick look at what the market is doing right now. Nifty is almost trading near the day's highest point. We have Bharti Airtel that's in focus among the top contributors coming in for the Nifty 50. And we have an upgrade that's coming from ICICI. They've upgraded the stock to a buy from a previous ad, target price of 1,875. So let's keep an eye out on Bharti Airtel. ICICI Bank also among the top contributors coming in there, as well as Reliance Industries, which is supporting gains, L&T, as well as M&M among the top movers and contributors for the Nifty 50. So keep an eye out on that. But with that, it's a goodbye from myself as well as the team who put this show together. Stay tuned in for more updates on the other side.